Check, check, check. Check, 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 check. There we go. All right. We got some good stuff going on. All right. Good evening, everybody. We're going to do this a little bit earlier. Just because I know I want to make sure I'm getting into live tape reading a bit more. I don't know if I'm going to be able to do this all the time just because, the wife's not here today. So I have the opportunity to do this today. But yeah, we're going to take a quick look at Asia and this week as well as we prepare for the week. So first and foremost, we're going to do weekly prep. Jay Whitway. Oh, yo, you're still at work. Totally understand. No, I'll try to recap towards the end. Just was hopping on to do some live trading or live tape reading. I'll see if I'll take a trade or not, but yeah, sounds good, brother. Okay, so let's do the weekly prep. Key things this week, as you all know. We have FOMC statements on Wednesday. So that is where we are likely going to see either low of the week or high of the week. Potentially Thursday, where we have unemployment claims and Philly manufacturing index, but Wednesday is really going to be the day where we see the most happening. So you want to definitely, Mondays, doable, but generally you're going to have far greater accuracy and you're going to get most of the weekly expansion if you wait till Wednesday to trade. Not saying you can't trade Monday and Tuesday, but I'm basically going to be taking liquidity to liquidity when we do this. So, oops, I don't have the webcam. Let me switch over to the screen that's got the webcam as well. This wasn't showing this. Hey, what's up, Nor Delimi? Good to see you, brother. I don't think I've seen you on the stream before, so thanks for joining in. Hopefully this can be of help to you, but mostly this is for me as well. Asia's opened up already, but we want to take a look at the weekly profile. So we have an 8:30 a.m. news on Monday. We have Empire State Manufacturing Index, so you might see some volatility on Monday at that time. So you're going to want to, what I kind of like to consider are what is the new week opening gap that we open at on Monday, right? What does that look like? Where is that going to be referred to? Two, from a weekly profile, if we are going to continue higher, then I would anticipate Monday, Tuesday, we would trade lower, right? From a weekly profile perspective, that weekly candle is what we're trying to anticipate what that looks like. So we're gonna look at that in a moment. But from the rest of this economic calendar, Tuesday there's core retail sales at 8:30 a.m. So lots of stuff at 8:30 a.m. this week. Wednesday, I would not recommend you trade if you're not done before building permits at 8:30 a.m. It's going to be a rough time in the morning. Just wait for FOMC. Generally, FOMC is a two-part delivery. First half hour from 2 to 2:30 or 2:45, you have one move, and then the real expansion move happens at 2:45 onwards. So that's the move that I always look for. Sometimes it goes one direction and runs off, but many times it is a two-part delivery. So oftentimes it'll go one direction and then we'll take out a key level and then it will reverse in the other direction. So keeping that in mind, it really will depend. Right now, everyone's expecting a rate cut, so it's going to be really depend on what happens there. Either way, we trade what happens. We look for liquidity and we wait for that liquidity to be swept. That's your goal on Wednesday, is whatever liquidity is there, and regardless what gets announced at 2 o'clock on Wednesday, look for whatever liquidity is there to be taken, and then expect that it takes that liquidity, and then look for displacement in the opposite direction, and then that's going to be your signal to trade. So Wednesday, obviously the most important day. Thursday and Friday. Thursday's got some unemployment claims. Friday, FOMC speaker. So nothing too crazy on Friday. But yeah, so weekly profile, we're looking for a extreme to occur, meaning on the weekly power of 3, we're looking for a extreme low or extreme high to be formed on Wednesday or Thursday this week. So keep that in mind that you could get accumulation throughout Monday, potentially a Tuesday run towards liquidity, which will be eventually taken on Wednesday. So you'll want to keep those in mind. Keep in mind that everything on Monday and Tuesday is going to set up liquidity to be taken on Wednesday. So, okay, so let's go take a look at the charts here in the background. So we're going to take a look at the weekly. We're going to do weekly prep this week, and then go from that to daily, and then we're going to start tape reading. We'll probably stay on from 6 till maybe like 7, 8, 9-ish if I can. And we're going to see if we can find a trade. I don't want to be forcing trades, but I want to try to tape read. So if I can take a sim trade, then I will do so. And let me actually do that. I want to make sure I can set this up so I can copy to the sim, have that available. And we're gonna just switch everything to micro NASDAQ here. You'll notice that on my screen I've got NASDAQ and micro NASDAQ. They don't differ that much. So I'm gonna be saw you in the shotgun Saturday. That was a refreshing one. Oh, that's awesome. Yeah, I think I saw you too, Jay Whitway. He talked a lot about neuroscience, and for those that get the heart palpitations when there's too much risk going on, then that was a really good one. He really talked about, and either way, you shouldn't be over leveraging, so you shouldn't feel that. But either way, it was a good one for sure. But one thing I want to draw you to for anyone who is trading right now is that I'm seeing that there are. Okay, so let me get rid of one thing here. So from an intraday, let me get rid of some of these here. Notice how there's a relative equal low which formed right here. Just from a tape reading perspective, the lows that formed at 12:50 the previous day, and the low that just formed at 8:30, or sorry, 6:30. Notice that formed a very, very, very relative equal low. So I anticipate that's going to get taken. And we noticed that it instantly rejected from the new week opening gap. So what we're looking for here is that a short-term low got taken out. We see that a relative equal low formed, but it did not take that relative equal low out yet. So if this continues going higher, you want to look for low-hanging fruit. And if we see like, a movement above new week opening gap, then you can actually take that trade. You can look at a 1 minute time frame here. If we go above new week opening gap, you can kind of take the trade from the new week opening gap high or the midpoint and take that up to potential liquidity, which is up here at roughly the high 19,528.75. That's what I would be targeting if we get above the new week opening gap high, okay? Because, and with the expectation that once it takes that out, we may go lower to take the relative equal lows, which just got formed, okay? Now, this could reject from the new week opening gap low and continue lower as well. It's staying within a range where it's at right now. So for those that are trading, that's what I'm looking at right now. Hey, what's up, LP Trades? Good to see you. Let's go back to weekly prep for the time being, okay? So, from a weekly perspective, we saw that this weekly candle just almost completely engrossed the previous one. Now, notice that it is a candle that is an inside candle, right? So what does that mean? So this means 2 weeks ago, the high of that week and the low of that week was higher than the high of last week's high, and the low of 2 weeks ago was lower than last week's low. So you're going to probably see price trade down into this area. We do see that there's a balanced price range that we're in right now, which makes it very difficult to determine draw on liquidity, because likely on the lower time frames, this means we are going to end up going from liquidity to liquidity. Could be internal range liquidity to external range liquidity, and then external range to external range liquidity if all other internal range liquidity has been taken. So you want to try to think in terms of going from, if there's relative equal lows, that would be external range liquidity. Once we take that out, you want to look for, let's say these relative equal lows get taken out here. You'd like to look for, if we see evidence of it popping back up, as you look further to the left, back on 9/13 at 10:40 p.m. or 10:40 a.m. Is this 10:40 a.m.? Yeah. You see that on the 5-minute chart, there's a buy-side imbalance that you would also be going down into. So I would expect, if we take those relative equal lows out, for us to bounce up from that range in there. Now, you don't see anything on the 15-minute, which, I mean, that's pretty much a balanced price range. And I want to draw your attention to one more thing as well. On Friday, the 13th, if we're looking at the 15-minute chart at around 145, you'll see a high there. I'm drawing that through. I'm seeing these candles are being supported there. So I want to see, do these candles close above that area there? I don't know if that's going to serve as a mitigation block to the upside or not, but there's a lot of trading that's been done around there. So we'll have to see if it remains open there. Okay. So back to the weekly. So right now, your weekly chart looks like this, where you have a tiny little new week opening gap which formed, and you're watching to see, is it possible for us to expand lower? Is it more probable for us to expand lower? Or is there liquidity for us if we expand higher? Now, I'm of the impression that we will likely expand higher this week. So I'm still bullish on this week because on the weekly charts, you've got a weekly sell side imbalance above us. What else do you have? And this goes back to July. So for those who are watching on the charts, you see an imbalance up here where there's a low, an imbalance, and then another wick high. And what do you have here? Relative equal highs on the weekly chart. So that liquidity needs to get taken. I don't know if it's going to sweep up in the first half of the week, take that, and then sweep back down, or if it's going to maybe drop down into midway through this past weekly candle and then shoot up and take up all of this liquidity up there. I don't know at this time, right? So we need to see how Monday and Tuesday trade. If they continue to trade lower, then my thoughts are initially that that's going to set up a nice play to the upside. So key areas on the weekly chart you want to have marked out: new week opening gap from this week, new week opening gap from last week, the relative equal highs on the weekly chart, that sell side imbalance in July on the weekly chart, and maybe on that down below, down in August, there's that giant wick that ended up taking out some liquidity on the NASDAQ chart. That could be a point of interest. I don't know if we're going to get that low today, but we for sure are going to expand into one of these directions this week. So, LP Trades, good evening. Hello, hello. LP Trades says, good. What's up, Jay? Awesome. Okay, so from a weekly perspective, notice how we have that liquidity up here. Now, while my eyes are drawn to that liquidity above us, that's just we still need to think in probabilities, right? LP Trade says, I'm still waiting for the Fed to confirm a rate cut. Yeah. Generally, rate cuts are generally good for the market, but that means banks can lend at cheaper rates. It should help the housing market a bit, but you never know if it's going to get priced in, right? So that's what we want to think about today and this week. Everything's going to be handled on Wednesday. So if you want the cleanest price action, just wait until after FOMC. You'll probably get multiple hundreds of handles that go on that day. Um, let's see, Jay Whitway, have the jar ready. Yeah, yeah, that's true. Um, so yeah. So trading on Monday, Tuesday is going to be like the most annoying, I would say. There's going to be plays. You want to be nimble, so you want to watch out for liquidity. If you see relative equal highs taken, don't expect it has to run longer than that, okay? So we're going to go down to a daily chart now. So know that on the weekly chart we're in a balanced price range. Price can still consolidate, but we're kind of like homing in. You can kind of see that we've made a short-term high. In fact, on the weekly chart, there's an intermediate term high that's the all-time high right now, where when it broke, almost broke 2100. So I think that we'll have to see if we end up. So we made an all-time high, an intermediate term high there, and then we also ended up making with August's weekly chart week low a new higher intermediate term low. So things are still moving up. We're still in an uptrend. We haven't seen displacement to the downside just yet. Okay, so watch price, by the way, right now. We're watching price to see, does this have a tendency to go higher and bounce, kind of like bounce off of that new week opening gap high. So it was just rejected from there, but we want to see, does it close above the new week opening gap high, come down and maybe wick down to it and kiss it, maybe the midpoint here, and then head back up higher, either towards this 1 minute SIBI, or of course we have first target being 19,529. I think I marked that on the NASDAQ chart, but I didn't mark that on the micro NASDAQ chart. So I'm going to put that there just so that we have it there. On NASDAQ, you'll definitely see the same kind of line up around that area, okay? That would be the first area of liquidity that I would target, because what? There's a relative equal high up there. There's a sell side imbalance up there on the 1 minute as well. So if you're going to take a trade, I would target that area, and then I would target that internal range liquidity. I would expect it to potentially maybe go up and take 19,526 and that relative equal high as well. But at some point, I do expect it to reverse and take out on the short side the relative equal lows, which formed right at open. Okay. 650 right now. So we're almost establishing the initial range of the first hour of trading for Asia, which is going to be beneficial because that gives us our initial buy side and initial sell side liquidity. And we'll mark those out in a moment here. Actually, I'll mark that out right now. Let's see. Mark these out here. We'll label these in a moment. I want to get through weekly prep still first. Let me make sure I'm not missing any chats. Okay, good. So when we think about the daily charts now, so knowing that we're within a week where we've created an intermediate term high, we've created an intermediate term low, and we're right in the middle of this whole dealing range. So what you want to do is, since we've had this dealing range established, you want to make sure you swing grade and at least find the equilibrium point of this whole swing high to swing low on the weekly chart, okay? Because, and why those two? Those two define our dealing range, because we made a higher swing high and we haven't broken that yet. And we have a lower swing low and we haven't broken that yet. We're in the middle. In fact, we're in a premium, because you can see this 50% mark is roughly around 19,150, 55. So we are likely going to ping pong up and down, especially within the new week opening gap area, but also potentially could ping pong down to equilibrium and continue to consolidate in that area until FOMC takes us into one direction or the other. Okay. So let me put this a little bit higher here so we can observe the 1 minute chart too. I'll take a trade if I can see it. Lions Fit, good to see you, man. On the weekly, SIBI above, it's 75% of it is a balanced price range. Oh, I couldn't read that before you deleted that. Dang. Sorry, I didn't get to that lines fit. Let me know if you want to repaste that, okay? Um, okay, so yeah, I think what lines fit was saying is like, so I know this is a little hard to see here. I'll try, let me pull this over to the left a little bit so you can see the percentage range is a little bit better. So you kind of see that a tiny bit better there. Let me make this just, there we go. So you can see that upper quadrant here is what Lions Fit was pointing out was that weekly level, those two orange lines here. Let me figure out what that other orange line was. Oh, that was the relative equal high up there. I'm gonna, you know what? That is the SIBI low. And there's a bearish order block up here too. I'm actually going to remove the bearish order block on the weekly chart because it's just easier to see the sell side imbalance on the charts instead. Okay, so what Lions Fit was pointing out is that the upper quadrant of the dealing range, which would be a premium, is indeed where that weekly sell side imbalance is. Now notice you have a daily sell side imbalance up here as well. What else do you notice up here? This sell side imbalance midpoint is at the high of that weekly sell side imbalance. So I would also expect Lions Fit says week 7-2 is balanced price range into 715. Yeah, I could see that. 715. Oh, he's on the weekly chart. Oh, yeah. Yes, I could see that, definitely. So I wouldn't expect that if it does go into that daily imbalance, then maybe just the midpoint would be key for me because that's at the very high of that sell side imbalance on the weekly chart. So notice what we did here. Notice what the candle bodies did on the 1 minute chart for NASDAQ. What happened here? Oh, I actually was on NASDAQ. Good. Okay, good. Let me... Okay, good. Okay, let me make sure that these are all on NASDAQ so that... I think this is green. I want to make sure I'm on the appropriate charts here. Okay, good. So this was NASDAQ. Okay, I'm charting on the right chart. So right now, you see how it went back to new week opening gap. The bodies are staying within this new week opening gap. So what you want to watch for, if you are scalping on the 1 minute chart, we saw that we did not take sell side liquidity here. Okay, 5 minutes till the initial range is being established, right? This high here, this is what we would call, and this is how you can label it. So the first high formed at the first candle of the week is, I'm going to label that initial buy side liquidity. Okay. Above it, we have relative equal high, buy side liquidity as well. So we're labeling that. I should probably put this on all charts, but there we go. Let me make it so that we can see this on all charts. So we need to wait for a price to tell us that it's going to be leaving this new week opening gap range. We are close to establishing. Look at the structure. I want your eyes to be drawn to the initial buy side liquidity and initial sell side liquidity here, because this is really important. This is something that ICT had mentioned, right? In any given session, if you have uncertainty surrounding, and you have relative equal highs, relative equal lows on both sides, you need to wait for one of them to get taken. Now, notice above you that you also have these relative equal highs up here. Okay? So you need to be cognizant that I'm going to draw these out up and all the way. For now, I'm going to draw these out to, let's see, about 1600 on the day. So I'm going to make sure that these are initial balance is going to be important. It's referred to throughout the rest of the day. And I'll do the same thing with the relative equal lows. That'll probably be taken. And then I'm also going to, oh, geez, what happened there? I think I just moved one of the mitigation block ones. Let me get this one extended as well. All right, so we have our initial imbalances there. Now you have those there. So I'm going to be watching these very closely. We will be watching to see which ones get taken first, okay? So notice that when I went to the 15-minute, there's actually a relative equal high. If I can get this to actually work, sorry about that. So we can kind of see these short-term highs form relative equal high buy-side liquidity. Is there a buy-side above us? Yes. Are there sell-side imbalances above us? Yes. But notice that this sell-side imbalance, we traded to the 50% mark and we did not take that 50% mark out. So I would look to see if we continue higher, I would look to take out these relative equal highs and then potentially take out these relative equal lows. Okay, so that's how I'm framing Asia session. I will take a trade if I see that form, but for the time being, it has to leave. I would prefer it taking out one of the two and then showing us a willingness to go lower. I would prefer that, but I don't know if that will happen just yet. Okay. So let's see. Initial buy side liquidity is up there, relative equal high. Then we have a big, much higher short-term high. I do not think that this one's salient. We will mark it. Nevertheless, if price wants to head up there, we'll have it on our charts, but otherwise we will keep our eyes more so on the liquidity at hand. Now notice there's also a sell-side imbalance up here too, right? I'm not going to keep this on my chart, but I'm going to mark it here just so that you can see this on the 1-minute chart. You can see this sell-side imbalance here, okay? So that leads me to believe that if we go to take out this relative equal high up here, that we're likely, if we haven't taken out relative equal low, we're likely to see a turtle soup, a higher probability turtle soup happen around that time, okay? So keep those relative equal buy-side liquidities on your charts. They're going to be important. So you can kind of see how we're kind of just like trading around this area, right? But notice this we're at 7 o'clock now. So our initial range has been established. This initial buy side liquidity has been established, and initial sell side liquidity has also been established. Okay. There's also a relative equal low beneath that, but you know, you want to wait for one of those to get taken. Preferably, I would prefer taking out the relative equal high first, because then that will lead to a really nice market maker sell model on the lower time frames. So we're watching, do we see candle closes above that new week opening gap high? And then do we see a wick down into that? So that's what I'm going to be watching pretty closely today. Let me make sure I go down. Okay, so we've gotten, and so what do we have here? We have a potential imbalance. We have a bullish order block up here. So I can probably be safe if I set a buy limit here. Oops. Uh-oh. What happened here? I'm getting an error here. 1 second. Rejected would exceed the limits. Oh. Hold on. Something is wrong with my trade copier. Okay, good. There we go. Let me make sure my trade copier is working appropriately. All right, so I want to set a buy limit here. We did not trade down to the new week opening gap, but I want to set a buy limit. I need to move it from there to, let's say, right at the top of that bullish order block that I see there, because I like this as an imbalance above the new week opening gap. I want to see it maybe, if this closes on this minute mark, I may even move the limit order to start up here at 504 to get the best entry, right? Okay, so I want this entry here. It may stop only at this volume imbalance as well, because this could be a breakaway gap. Look at that behavior here, right? So I want to see it come back down into this, maybe this volume imbalance. I guess that might be a little better of an entry. You don't see that same volume imbalance on, and your stop has to be below this low here, this fair value gap. So this is I treat this as a bullish order block, these two here. The actual order block here would be a potential entry, which it can go to. And you may also want to confirm that, like, if I swing grade this level here, that means, geez, sorry, you can't see these numbers here, but let me try moving this out here so you can see. Okay, so this is, I'm grading the order block here, so you see this is the mean threshold of that order block. I don't want to see it close beneath this. If it does, then I'm okay being stopped out, right? So probably below, if this triggers here, a stop loss below, okay, perfect. So we got in. So a stop loss below that, you don't have to go all the way below. I think probably stop loss below here should be sufficient. If it's meant to go higher, then it will. I would like to set my take profit up near those relative equal highs. We're going to just let that go, you know. We're going to see, does it have willingness to go higher? If not, we will get stopped out, and that is okay, right? So, but we want to at least, like, what we can do on NASDAQ is make sure that our stop is just below new week opening gap low, okay? Now, if you don't have any ways to take profit, like you're only trading one contract like I am, then that's fine. This trade can go against you. Again, this is sim, so do not take any of my advice as trade advice, but I wanted to talk through the logic so that you can see, like, hey, if it works, it works. If it doesn't, we have a stop loss for a reason, right? If you see the play happen, then great. Now, this is a lower probability play, but we are kind of treating this like a balanced price range there, and we're hoping it doesn't get down into, and I'm going to get rid of this real quick here. Actually, I can keep that there. That's fine. But what we're hoping is that it does not get down into this. We would prefer to see this remain open as a breakaway gap, and I'd like to see it run for relative equal highs up there. I'm going to set my stop loss, or my take profit, right at that initial buy side liquidity, okay? So we saw another nice down close candle here. Now, we have to watch out for this sell side imbalance, right? This could hit this and immediately reject. We would prefer it doesn't do that. We prefer that it continues higher to take out this relative equal high up there. So that's how we frame the trade, at least, right? So we'll see if we get it. If not, you know, we'll look for price to create an impulse leg higher, maybe go just below this and start to peter out a little bit, and then maybe it trades lower a bit to get some shorts in, and then squeezes up to take out that initial buy side liquidity, okay? So that's kind of what we're working with right now. Could it drop right now? Absolutely. It's really tough, especially when it hits that mark there. So I don't want to choke the trade out yet, though. I like seeing this type of price action. So I want to see if it has the willingness to expand higher, okay? Okay, so let me see if I missed some. Let's see, Lions Fit, it is on NQ, change it to micro NASDAQ. Hey, what's up, Infinitely? Good to see you. Thank you for coming. Appreciate having you here. Okay, so here, if you only have one contract, you could probably just take that, take your 100 and be done, right? That's one trade in Asia. $100 is a lot. You would be totally fine taking that trade and being done for the day, right? I'm going to wait for another drop down into this area. I would expect price to head into this volume imbalance and then maybe come up into this. What I want to see is, does it take this short-term high, and how does it react at the consequent encroachment of this gap? Do we get to the consequent encroachment of this gap and fail? If we do, I will collapse the trade because that means it's very, very weak. It doesn't have the willingness to go take out initial buy-side liquidity, right? So I'm going to let this trade breathe a bit. We have this buy-side imbalance coupled with a down close candle. If this candle had touched, I would consider that to be a propulsion block, but it's okay. So now it's reached the sell side imbalance. Take off a partial there if you haven't already. I'm going to move my stop in profit just to take, this would be, if I moved it here, that would take, that would be bad management. But I am actually, wouldn't be a bad place to take profit here, but yeah. But I think we could do this without, I want to see how does it react here? Does it immediately reject from here? Does it have willingness to go higher? And like maybe treat that sell side imbalance as a balanced price range. Now, I want to see it close above that sell side imbalance before I move my stop loss. Okay, good. So we closed above. We can move our stop loss in profit. We want to see this volume imbalance remain. You can take profit. A safer profit level is 19,524.25, okay? So if you're in this trade, you can take profit at that level. That's a shorter relative equal high. Notice we took out this short-term high up here, and we rejected from there, so this could reject from here as well. There's no guarantees. So this is why you want to take partials, right? No guarantees on this that it'll continue higher, but I do see that these relative equal highs could be taken. So we do want to keep in mind that it could come all the way down and take out this relative equal low right now. And we would be okay with this happening, right? But we do see that this range here was essentially now a balanced price range. So we would want to see price just bounce, kind of like bounce off of that and head higher, taking out this initial buy side liquidity. So we should see some violent move. I would expect it to take out the initial buy side liquidity and the relative equal high buy side liquidity that we have up there. Sometimes it'll stop short and completely reverse. So we need to be careful here and watch this very closely. Okay. But overall, pretty solid move there. We should expect moves here to get some more people short. As you kind of saw there, it kind of like, you saw a little blip down. So if you look on the 15-second chart, it's actually a really nice propulsion block there. So we should see this run out the initial buy side liquidity here. Now, do keep in mind, if you haven't taken a partial, this area is the higher probability range. So take profit at 19,524.25 if you're scared and you think you don't want to wait for the initial buy side liquidity to be taken out first, okay? So that would be, and in fact, what I'll do is I will move my take profit there just to show you that that will get taken, and then if it doesn't take initial buy side liquidity, it will likely just take that at a later point in time. But this first area of liquidity should get taken. I don't see a problem with that not getting taken. Okay. Have some ghost positions I need to watch out for with that trade copier. And I should just collapse this position, but I think it's going to take it out. Otherwise, it would form another relative equal high, which means that will get taken out at some point, right? So I think this should get taken out here in a minute here. But we'll watch this closely to make sure we can collapse the trade if it starts to fail here. So we'll watch this very closely. Let me make sure I didn't miss anything in the chat here. No, everyone's good in the chat. So again, you could collapse this here. This would be a nice $300. That'd be a great day. You'd be done trading Asia. You've read tape appropriately. You know, you've been able to make your entry, solid entry patterns there, and this should sell and take out this initial peak right there. There we go. So we got through. Very nice exit there. We check our accounts, make sure our accounts have closed. So really nice little trade there. You can kind of see how, if you're home already, like me, I work 9 to 5, so I sometimes have to find trades during the Asia session. ICT doesn't enjoy the Asia session, but he's laid out a really nice, really nice, and there you go. There's initial buy side liquidity taken. Watch for it to take out relative equal highs, and then watch on the lower time frames if you see a kind of like a bearish breaker form here that goes below this low here. Okay. After you take out that liquidity, that was going to be your sign for going short. Now, keep in mind, you do have liquidity above here. I don't know if we're going to take that, but so there you go. Your relative equal highs are done. You don't want to immediately go short right then and there because you have liquidity above you still, right? On the 15-minute, you have liquidity above you. Now, what do you have above you as well on the 15-minute here? That wick, right? So can price go, where can price go to? About 50% of the way of that wick. So we're going to mark that level out here. And we're going to mark that here so you can see that. We're going to mark that as a buy side liquidity, because we treat those wicks as gaps as well. And I'll make it a dashed line just so we know it's a midpoint. And yeah, so those two are your next areas of liquidity, knowing that you've got a 1-minute sell side imbalance up there too. So we're going to look at the 15-second though for the time being. And we know that this is a relative equal high. We know this is initial buy side liquidity. We sweeped both of those. Now, you want to see, do you get one of these situations where it's a high, low, higher, high, and then a big displacement lower? That's going to be what I would look for here, for you to target new week opening gap as a target, or potentially the relative equal lows. Let me go back to the 1-minute chart. The relative equal lows we outlined at the beginning of Asia session. Okay. So I'm going to leave this on the 15-second chart just so you can see how price is forming around those levels. It's kind of key, right? So that was a really nice little copy trade. Just one micro on my other accounts that I'm getting out of drawdown, and then I copy traded to 6 micros, which is if you do the math on the 300Ks, you get 7,500 in maximum drawdown, right? So you want to say, what is 2% of that? 150, right? Divided by 4. So if you're trading micro NASDAQ, you need to understand how many contracts can I if I'm using a typical 10, 12 point stop loss on NASDAQ or micro NASDAQ, what could be my stop loss? How many contracts can I trade? So I took 7,500 was my 300K account, like maximum trailing drawdown, right? Times 2%, because that's what I want to risk, right? Then I take that divided by 4 contracts per micro handle, divide by 50 cents per tick, right? Or sorry, per handle. And then I divide it by, let's say I'll have 12 points of drawdown. So this gives me roughly the number of contracts I'm allowed to obtain and kind of like look for, right? So 6 contracts, if I lost 12 handles there, then that would have been a loss of $150 on my 300K accounts. Instead, I looked for this trade was almost like a 2 to 1 R maybe. Let's see, 05, 15, 25. Yeah, so roughly 20 handles there. So, $205 copied across 5 of those accounts. So that was a nice, $1,000 there plus $36 for the 1 micro accounts that I'm slowly building back. That was about $36 on those. So 36.78 times 5. So $183. And then 205 times 5 plus 183. So you can kind of see how, like, on my let's see, I have 1, 2, 3, 4, 5. Wait, let me make sure I'm counting this right. 1, 2, 3, 4, 5, 6, 7, 8, 9. So I have 10 accounts total. I have 5 that are in more drawdown than I would like to see. So I'm using 1 micro to get those back out of drawdown. And then for the 300Ks, I'm using the Apex trade copier, which, let me make sure what's going on here. So let me take a screenshot of this so I can show you what that trade copier looks like. Let me hide a couple of these things here. And let me hide the account stuff so I don't show it to the world. Let me black out some of this stuff real quick. This takes a while to black out. I'm going to show you what the settings look like on the Apex trade copier that allow me to trade like I did today and use the sim as what I show outwardly from the demo trades, but be able to show you, like, hey, here's what I'm looking at. Let me make sure I can move this over to the other screen. Okay, so let's move this over. So when I look at the trade copier, you can kind of see how I've got the micro NASDAQ. I've got an account. Oops. Should probably grade that one out too. No, it doesn't really matter. People can't do anything with it. So what happens here is I have a ratio of 1.00, but then I also have a ratio of 6.00. So every 1 micro that I trade with my leader account, 6 for the 300Ks, 6 micros are traded on the 300Ks. And then, for the sim account, I crossed that so that I could trade 1 mini off of the 1 micro leading account. You're technically supposed to use minis and then cross over to micros. There are some issues that arise from that, but as you can kind of see, it's copied over for the 300Ks here. That's a sim 1, so don't disregard the sim profits. Yes, those were nice profits there, but you can kind of see I'm slowly building these back up. So you want to take it in stride and make sure you're risking the least to build back up when you're in drawdown. So, but yeah, I mean, look at how much time it has spent around this relative equal high, right? So what you want to do now is you're waiting. Do you see a displacement below? So you're looking to see, do we see a displacement below a short-term low? We do, right? So what I would do here is I would wait for this candle to close. I'd expect that price trades back up to this volume imbalance and then potentially sells down. Not to say that it can't trade higher and take out this midpoint up here, but you know, there's liquidity above us, so it's not super clean trade there. Not as clean as the one before, right? So what did we see as well? So does anybody have questions on that trade? Did that make sense to everybody here? Do I still have people here? Let me check. Let me see if there's anybody even here. How do I check this? I probably need to go to YouTube, huh? Okay, yeah, there's some people here. Yeah, any questions on the trade? Any I hope that, like, you know, outlining it and reading the tape like that helped. So now you can see we're displacing, right? So so we had high, low, higher high, lower low. We did not trade back up into this breaker point, but I do think that we probably will trade back up into this volume imbalance, possibly this volume imbalance up here. Like, I would like to see a wick up into this candle. That would be great. Let me see if there's a breaker. So if I were to show you, I would expect this, probably this candle here to be a breaker, and for us to trade up into potentially this little one up there too. But on the 15-second chart, I would expect it to trade there. On the 1-minute chart, since that is a wick on the 1-minute chart, I would expect this to trade like to there. So that low right there. So we traded up to this volume imbalance. I would expect to see us trade to maybe the midpoint of this wick and then start to aim for what? This balanced price range down here, okay? If I were trading short, now this would be one of those situations where you could take a short trade here. If it continues higher, you get stopped out. That is it. Napstone, everything you said, I understood. Awesome. Good. Infinitely, thank you. Okay, good. Lionsfit, talking out your trade was excellent. Nicely done. Okay, thank you, Lionsfit. I'm glad. Jay Whitway, walkthrough you did was great on that trade. I'm not even watching, but I can see it while you're talking. Okay, great. Yeah. And that's okay. You know, Jay Whitway, you're going to be able to watch this later. So here's an example right now where, you know, we know there's liquidity above us, so we kind of had to be careful here. That's why I'm not taking this trade. It could just drop, absolutely, but you don't typically, you typically see a reaction if it's going to. You typically see inducement of, you know, continuation lower if you're going to see something here. So I'm not super convinced yet, but technically it's still within that breaker. So it could, if it drops there, then that would validate the trade. And you can look for a re-entry. It's a tough one because you have a balanced price range here where this other, let's make this balanced price range purple. So there's a balanced price range up here that potentially we could trade down to and bounce off of as well if we are even bearish. Now, that kind of movement that you saw there, not the most bearish. So chances are we're going to head higher first, right? What can we head higher towards? Remember that 15-minute wick, the midpoint of that wick? That's the first level that I would look for. Actually, the first one is here. This is a rejection block where we're at right now. So we'll see if price maintains up and continues to head higher. So far, it hasn't created a higher high, but there's still time. So Yeah, so that this allows me being able to trade Asia and just read price action. Like it's really nice because it moves slower. You can read price action and kind of journal and say, like when I journal this trade, I'm going to I'm going to write down exactly what I talked through with you here. I'm going to say, all right, I saw Asia start. Um, I saw it. I saw like my structured plan for Asia is that I need to see an initial short-term high formed. I need to see an initial short-term low formed within the first hour of trading, and then I need to look for one of those to get taken out if I see two. If I don't see two of them, then maybe I can have a better sense of like it going for one direction or the other. The trade that I took there was a combination of balanced price range in the new week opening gap. Price went up, down, like all within the new week opening gap, up until 7 o'clock. Now, 7 o'clock hits. Time, right? Within the first 2 minutes, we see a buy side imbalance, breakaway gap, and we entered on a volume imbalance. So go back and watch that portion because I've seen so many times when I wait for this sort of a, what looks like a buy side imbalance coupled with a bullish order block. So many times I've tried to wait for it to come back down there and it just comes short because there's a PD array right above it. That's why I moved my entry to that little tiny 1 minute volume imbalance. And what did we have there? Like we had 19,505. We had half of a handle of drawdown and it just went away. Those are the type of trades where you can feel most confident holding much longer, at least to the next area of liquidity in order to garner your take profit. So we took profit at the lowest possible range there. It did end up taking out the initial buy side and initial relative equal high buy side. And that's, once you can scale, like even if you can't scale, if you can scale with one account only or two, three accounts, you can pass the 50Ks pretty easily on Apex. 25Ks you can pass just as easily. And you saw you saw what I did, right? I only used micros and let's say, you only passed a few 25K or 50Ks, right? Well, over the course of 3 months, you're going to get to the point where you're beyond the trailing drawdown pretty easily. And if you copy trade, 1 micro trades across 3 accounts, that's $100 a day you could be getting. That's extra money, So, yeah, I think, do I expect it to continue going higher now? I mean, that's so tough. There's such good liquidity up here at 595 or 695 that I could definitely see if we have an expansion week higher, I could definitely see us expanding up towards that 695 level. There's just so much liquidity around there. So I would keep that on your charts. Keep that on your charts as well. And notice one other thing too. Okay. Remember, ICT mentioned that new week opening gaps are kind of like a magnet for liquidity, right? Above us on the daily chart, you can see this on the weekly chart, but you can see it easier on the daily chart. I have the previous new week opening gaps extended forward for 5 weeks. There's, if you're on TradingView, there's other indicators that show you new week opening gap as well. But I have to manually draw these on NinjaTrader just because there's no, indicator that does that. So I always, draw it out for 5 weeks, copy them, keep on pasting them. But look at the concentration of new week opening gaps up near that 595 level. That leads me to believe that that's going to be our initial draw. Now, whether or not we trade down to those relative equal lows down here, we might never trade down to those and price could just keep on going for the rest of the week. So you don't, until we take out key areas of liquidity and show proof that we're going to head lower, you want to assume that, hey, we're likely going to continue that trend higher. But knowing that the rest of the week, yes, it could trade all the way back down here. We'll see. We'll see if price, consolidates. I would anticipate that we do end up coming back to new week opening gap at some point. Could be during FOMC. Could be everyone's expecting rate cuts and markets to rally, then they just send it lower for FOMC, and that surprises everyone, right? It could just completely rally because everyone sees the rate cuts and banks come in and continue to do well, right? So we don't know what's going to happen, but the draw on liquidity for me seems to be these new week opening gaps up here, at least to the upside. I could see that being an area of liquidity. There's also, at a previous new week opening gap, there's a volume imbalance here which has not been balanced yet. So I would definitely expect this new week opening gap to be traded to this week. Okay, so that's around 19,595. The liquidity up at 19,695, I think they'll reserve that for somewhere later. I mean, it could go up there Monday, Tuesday. It's very, very plausible for that to do that, right? But we'll probably maybe we'll trade our cash account. I don't know. But right now, it's taken out a buy side liquidity. It's accumulating now, and it's not selling off just yet. But so what does that mean? That means we need to look to see, is there other liquidity that we missed? I don't really see much. Lions trade could be a turtle soup to trap bulls, then head lower to somewhere near 19,350. I could see that. That's the midpoint of that daily buy side imbalance. Use FOMC to take out 19,580 maybe. Yep, I could see that. If it's going to go lower, I mean, look at how much liquidity is below us as well on the daily chart. That is incredible, right? I would look for whatever the previous weekly range is. I would pull out what that equilibrium level is. So from this low to this high, the equilibrium's at 18,981. Do I expect it to go down there? No. But it's possible, right? So what we see here, okay, so this is actually very interesting because we see the candles high, low, higher, high on the candles themselves. So if we start to see closes below this short-term low, you can treat this like a bearish breaker to head back down for either this balanced price range or head back down to this buy side imbalance that's within the new week opening gap that also has a bullish order block which has not been traded to yet. I would say all those are valid trades back to the downside if we get displacement lower. You don't want to be fighting the trend, so just wait it out, look for evidence first, and then look for retracements. That's going to be the best way for you to look for trades there. Cool. Let's see what we got. Let's see. Oh, I'm missing some. Sorry, I'm missing some calls apparently. I'm streaming right now. We'll call later. Uh-oh. So my wife was telling me she had a Vietnamese iced coffee after eating dim sum, so she's gonna be awake forever tonight. Okay, cool. So, yeah, so I definitely wanted to come back, make sure we're getting some live trades in, make sure we're getting in the habit of tape reading, right? I would have been fine taking this as a sim trade. I've taken so many sim trades, and you know I'm okay with the risk. So here, because I don't want to mess with my very green day already, what I could do is switch over to a different sim. But I am seeing this like I'm expecting to see this. I want to see displacement lower. I don't want to see like a small little thing here. But I definitely see this potentially this bearish order block here. Maybe this is a well, let's see how the minute candle closes here. I want to see does it reach that, and let me get rid of some of these lines here because they're a little distracting. So does it reach back up into this 19,526 level now and then immediately sell off, aiming for the balanced price range down there? We're watching to see does it mitigate from this fair value gap. If this remains open, I would expect the next candle to come up and fill this in and then immediately reject and head lower towards balanced price range here, accumulate distribution, head down towards this area here. So okay, great. So this is an area I would potentially take a short, maybe up in this area. See if I can get, what is that level there? 19,525.50. So 19,525.50, I would look to see, does it respect this level here now? Does it respect that? Because I consider this to be high, low, higher, high. And now, instead of this being a breaker, I have this last down close candle. And I see that as a potential bearish breaker now. So this here, I'm going to try and explode this a little bit higher so you can see. So I see this as a fair value gap. I want to see price stay within that. I see that as part of a greater sell side. Let me see if I can maybe make this slightly different color. Sandy brown. Because I see this here as a sell side imbalance. And this here is like sandy brown. Let's do sandy brown. Oh, you can't really see that at all, huh? So you kind of see like these overlap on each other a bit, right? So I am expecting that if I can get in, if this allows you to get an entry here, then I would expect to see, does this wick stay within this area and sell off, or does it continue higher? So if it does continue higher, then we collapse the trade, right? No questions about it. And you want to probably then could target so this is where, so this is good. That type of reaction there is really good. We like to see that if we're expecting price to continue short. We want to see if price closes within this fair value gap or less. We don't want to see it close above there. But look at how nicely it traded to that volume imbalance, like to the T, that volume imbalance right there. It could still trade higher though. I mean, we're not getting that really nice big sell-off that we would like to see. So technically it could still trade higher and then just keep on going higher to take out higher areas of liquidity. I could definitely see that. So That's not what you want to typically see when you're expecting price to head lower, right? You're not seeing that big displacement lower. So chances are it's going to go for these relative equal highs now and continue higher if it doesn't close within this sell side imbalance here. Which 7 seconds left. TBD. Well, looks like it closed within there. So wicks can still do the damage here, but it's not looking good for shorts. Yeah, so you generally don't want to see this happen here. If you're short, you want to see it just drop short, keep on dropping short, and be heavy. But so far, it looks like they're just going to keep on riding up. So yeah, this accumulation may be part of a buy program to take it above this high here. But we'll see. So these all failed, right? All of these failed for now. This sell side imbalance did not work, so we want to see, does it get reused, I guess. Does this get reused, and does price come down to that volume imbalance low and then jettison up above there? That's what I want to see, what happens next here. If it can. So let's see. Let's see what we got here. All right, so next level is 19,543, right? I want to see if it has room to. So this is a kind of like first stage of accumulation, I would say. And we'll see if it's willing to go back up here or if it fails here. But these can be removed now because these were not respected. And this breaker not respected. Seeing to see it, does it come back down here and use it as a jettison point to head higher. Let me go back to the daily chart here. I'm going to expand this a little bit. So 19,578. Is that right? 578. 550. Yeah, it looks like the micro NASDAQ is a little bit different. Oh, wait, hold on. I'm looking at the wrong thing here. There we go. Ah, there it is. Okay. Yeah. So these two levels, might be the next targets here. So if this remains open, this volume imbalance here, that would be ideal. We don't want to see price close below this area here. We see an immediate rebalance here. So one candle pass through, sell side imbalance, one candle pass back up through here. And so I would like to see maybe does it revisit this point and then head higher towards these two targets next. Potentially the low of this sell side imbalance here. 549. it feels like it's accumulating here, so I would expect a continuation up to, you know, this 551 level potentially. So we'll see what kind of action leaving. So now what's happened now? We have an accumulation range here, right? So the next balance price range happens to be here. So we notice we went to the 15-minute wick. So this is the midpoint of that wick. So it's a natural area for us to accumulate some more orders if it's going to head up higher to take out this sell side imbalance up here. Okay. And what is that level? 549. So I would take off. It almost got up there. It went up to 546. Yeah. So it almost got up there. So let's see if it has room to take that 549 out. I'd like to see it continue and take out that area here. Potentially could retrace here. So that's kind of like why we look at that midpoint here to try to look for the next areas of liquidity, which we could take, since that is equilibrium, that's fair value for price to go up into the premium section of that wick, which could be treated like a fair value gap, right? So notice here, so far, we came down, rebalanced this volume imbalance, and we'll see, can we continue to trade higher, aiming for this level, which is also this level. Midway through that sell side imbalance, I'd like to see price trade up there and take that out next. Now, it'll be interesting if it trades to, you know, just around here, 549. I would recommend, if you're going to try to trade up above this, that you take profit at 549. It's holding here for now quite well so far. So it came back down to that volume imbalance and is being bought back up. So far this midpoint, we'll see if it closes around here and then sells back off, or if we continue to rise towards this 15-minute sell side imbalance here. It doesn't have to go any higher than this midpoint, right? But we have about 8 minutes left on this 15-minute candle, so plenty of time still remaining for it to sell off from here. Not saying it won't continue higher, just there are some areas of liquidity that need to be taken still. So also, if we think about this from a daily perspective, well, let's take a look at those daily candles again. I still think that we're likely to take out that 578 at some point. In fact, let me make sure. Oh, went down to this volume imbalance. Immediately so it's holding at that midpoint there. Look at the bodies close below that midpoint there. So what'll be very interesting is if this is one of those turning points where it's gone up, traded to the midpoint of that gap, and then so we need to see, does it continue to hold here? Do we see displacement candles really far up above that area, or was that enough, right? Was that sufficient? So that was a really nice area of liquidity there. So if we're going to see a reversal or shift in state of delivery, then we would need to see us break through this balanced price range, because now we have a high, low, higher high, and this would be the breaker candle if we get that. I don't know if we will, but if we get that, then that's the candle I would look for us to trade below, and I would take that short down to new week opening gap, potentially continuing down to this area if it is able to. So far it's bounced up off of that balanced price range. So we kind of just watch for now. Let me see. I gotta watch my fantasy teams as well. I got Patrick Mahomes going on right now, and he just finished his game. Only put up 14, almost 15 points. Trash. Wow, none of my players put up many points. Especially not my tight end, apparently. Wow, this is a trash team. Oh, I've got CJ Stroud, though. Still one more to go, so we'll see. All right, so this bounced off of that balanced price range. So I'm thinking that this will continue higher here. But again, it's really tough to, I mean, it's holding at that midpoint of that wick, right? So that's why we have that there. And actually this daily wick, right? The midpoint's actually on this wick, on the daily candle. The midpoint of that is at 19,540. So there's a daily wick. And then when you go on the 15-minute chart, there's a 15-minute wick that's a little bit above that. So 540 happens to be a daily midpoint as well. So I'm going to change this here to be the midpoint of this daily wick instead. Higher time frames are going to be, they're going to take precedence, right? So 540.25, let's say. And let's see how different that looks. You can kind of see how it looks up here. You see that how that changed very, very slightly. So we're actually holding above, or actually we're closing below that midpoint there. So we're definitely accumulating. We're not seeing big sell-off candles though. So I'm inclined to believe that we're likely going to head higher still. That's what I think, at least. Take profit would be, oh, as long as you don't see a big black candle here, I imagine it's going to creep up towards the 49 area. This is holding around this area quite well, right? We're seeing wicks bought up quite nicely on the 1 minute chart. Whether or not they continue is the question. Does this have the energy to break into this balanced price range and then continue selling off here? Or does it just continue getting bought up? So every time we sell off, it seems that it's being protected in this balanced price range, doesn't have the need or time to stay around there. So I would think that 550 should get taken out. That would be my expectation, and then potentially even 578, 577, whatever this level is here, 577.25. Unless there's something like really freakish that happens at 550, I imagine that's where you'd want to take off the majority of your position, is at 550. That's a important level as well, right? So we'll see if this accumulation allows it to rise up to 552 area. I would, if you are long, I mean, it's still accumulating quite well. It's staying within this balanced price range quite well. If we start to see a sell-off, though, this breaker is what I would look for. I don't know if we will, but we have to see how price reacts, okay? Lions Fit. I use the Lions, my main horse, for my fantasy. Oh, nice. Yeah. I have Joshua, what's his face? Jameer Gibbs. He put up some mad points for me. So, yeah, I got the Lions as well. Okay, so we're seeing price continue to consolidate around here. Wait to see if we see massive decline here. Right now, we're still seeing price come back down into this balanced price range and continue to get bought up. What is it holding? It's holding the daily wick high right now. It's closed. It's closing right around there, and it's accumulating still. So we haven't closed above that yet. On the 15-minute, we closed below there. On the 5-minute, we had a close above there. So maybe 5-minute charts a little bit cleaner, went down to volume imbalance twice and wicked back up. So let's see, does it have the juice to continue higher to take out 552? Now remember, all this liquidity has been sitting there since Friday when people have been selling off over here, right? So that liquidity is prime for taking. And what do we have above us, right? Remember, above us we have, let me go to the daily chart. Above us, we have those new week opening gaps that we could potentially reach for. So, I mean, it doesn't have to be today. It could still sell off, right? But it seems like price is likely going to head up to 550 and then eventually on the 15-minute chart, this potential high up here at 576. So, yeah. But 550 seems like a reasonable level here as long as it continues to accumulate and continue to creep higher. Seems like a reasonable reach up into that area. As long as it stays above this balanced price range here, you can kind of see how prices traded up and down. And then here's this area here too. Up, then down, then up, and then down. And it's bounced off of this same level here, right? So we'll see. So far, it's hugging that daily consequent encroachment of the wick. It's hugging that very, very nicely. So people are defending that right now. See what we got. Okay, cool. So it's 8 o'clock. So we are looking to see if at 9 o'clock or before we can get this handled. Oh, there's another call I missed. Okay, no big deal. Handle that later. So if nothing happens here, I would expect this to continue to creep up to potentially that 950 level, maybe 949, 950. If it can't break this midpoint and close above it, then, you know, I think it's going to slowly creep up there during Asia session. And then maybe to do a wick up into this area, and then we'll see, does it have room to trade higher, or is it just going to take this out and cash out everything there? So remember, we still have that sell side liquidity waiting for us, right? So 9 o'clock, we'll do a time-based closure. Asia session will be, I mean, it could trade later into Asia session, but we are going to be done by then because we need to make some food, start baking some stuff for this week. Honestly, I don't really love this price action here anyways. It's like, you know, typical Asia. Our move already happened. So it could just consolidate here for some time and just kind of like hang out around this level. For those that are trading, I mean, if it gets to like 9 o'clock, then chances are you might need to wait until like 11 o'clock or so. I don't know if there's any Asia news, but I'm not going to be trading it. I'm super green for the day, so very happy with the trades. What we're going to be watching. So while we're waiting on this and seeing if we trade up into 15-minute sell side imbalance, it's kind of just hanging out here. See what else we got going on. So I don't know how long this accumulation can go for, but it could go on for the whole hour. Who knows? So we kind of just have to. This is the unfortunate part about trading Asia, is that it can take a long time for these trades to pan out, and you have to have patience, right? So I would say if you are trading, then collapsing your trade at 550 would make a lot of sense if it's going to go up there, but if it's not, I mean, yeah, if it's not, then we would see large black candles start to take price lower into that balanced price range. So we're just going to watch for now. Anyone have predictions for whether or not FOMC is going to take us higher or lower overall for the week? Oh, we're back in that balanced price range. So if we start to see some really big dark candles here, then we'll start to look for evidence of shorts. But if we continue to see buy-ups, like, wick-ups, then we will, that's expected in a balanced price range. Okay. So we have a bit of displacement there. We have to wait and see, does this go even lower, or is it just taking out some liquidity that we have here and instantly going to bounce back up, right? Came down to roughly the midpoint of that balanced price range. And it was, again, seemed to be protected quite well. So I think, again, like, I do think that it's likely going to be, it's accumulating here quite well. It's being bought up. I don't want to go long here, but I mean, chances are it's going to continue doing this if it just, barely went to the midpoint of that balanced price range. It almost went to this previous relative equal high, and it immediately jumped from there. So yeah. So yeah, we need to see big displacement if we are going to take a trade, because it could just be heading down. I don't think it's going to take out this. This isn't really considered relative equal lows. If you look at candle bodies, maybe it is, but yeah. Lions fit 15:45, 15-minute time frame, taking consequent encroachment of the wick. Price is having a hard time pricing above it. I know you had it up there earlier. Yep. Same wick. That 15-minute wick. You can kind of see these wicks are still showing that buyers are still coming up. And we came down into this buy side imbalance. Coming down into this volume imbalance here. And this 15-minute candle has 3 minutes still remaining. Need to see if it closes below this breaker here. If so, then you can probably treat it and take it trade down to the midpoint of this buy side imbalance. And what would that be? Let's see. Okay. So we need to see it start to really close well below these here. And if we can start seeing price heading much lower around, we could probably expect this to be a bearish breaker if we can get price to trade below that short-term low. So far, we've traded below this short-term low and displaced. So, and that's through a balanced price range as well. So if this thing continues, I would expect this to at least trade to the new week opening gap high. Okay. Let me see what else is here. So a nice sell side imbalance formed. We have a similar setup here where we've now taken a high, low, higher high. So if we start to see true displacement below here, then I would target this, maybe the consequent encroachment of the new week opening gap, since it's within this area. This would be the high of the new week opening gap would be the first target, and then the relative equal lows formed earlier today could be a secondary target, but it doesn't have to get through that area. Okay. So we need to see it did not get below this low. So if it starts to trade higher, if you're short around here or here, then your stop loss has to be above this short-term high up here. Technically above this one would be even better, but $536. But yeah, I mean, if it is bearish, then price shouldn't go too much further below half of that wick here. So we had this 50% mark of this wick. We don't want to see it close too much more above that. We want to see this kind of rejection here, because then now we've come up into this sell side imbalance, and we want to see big, swift movements down beyond this balanced price range now. We don't want to see it continue to get bought up here. Okay. If we see it head lower and it just does like a quick blip below this and then continues to reverse, I would get out of that short, because it's likely just coming down to pick up some more liquidity before heading higher and taking out the buy side liquidity. So have to be careful there. Now, if we see big displacement down here, guarantee it's going to go down to new week opening gap. And what you can do, if you see a displacement candle below this, you should be able to put your stop loss above this sell side imbalance next, and it shouldn't be taken. If we are indeed bearish and we're heading down towards new week opening gap, which would be the first Technically a little bit above there, that volume imbalance would be the first area I would take profit. But if it's so close to that new week opening gap, I imagine it's going to head down there too. So we need to see displacement below this area. Once we go below that area, you could treat the breaker minus a tick or so. You could treat the breaker as an entry if we see displacement below here, but not to the new week opening gap yet. You have to be careful because there's a 15-minute buy side imbalance that we would be in once we got below that low right there. So we need to see, does price continue to go below that level? If not, then so be it, right? So we would need to see displacement lower, not like continued green up. We want to see displacement lower. We want to see price go no higher than the 50% mark of these wicks. So that's not the kind of signature you want to see. At the low of a balanced price range, we would need to see it really, like the last bit here, I would recommend is if we see price close above the midpoint of this bullish, I guess, up close candle, then I would collapse the trade at that point because it's going to probably reverse and head higher. Aiming for relative equal highs, relative equal highs, relative equal highs, right? So we want to see, does it take this sell side and just take that out and then head higher? Or do we take it out with some like big black candles? If it's just a tiny wick, then chances are it's not going to continue. Okay. See what we got. Little bit more, little bit more. What time is it? 8:19. So nothing out of the ordinary from a timing perspective. And we're starting to creep higher. Let's see what the lower time frames are holding. Okay, that's not good. We don't want to see that if we're short. Because that means we failed to make a lower low. And we're starting to close higher here. So if you are short, you kind of have to be careful here because this could start the next leg up. It would be considered a failure swing. So we're watching this really closely. We don't want to see this close above there. Oh, nope. That's going to be potentially institutional order flow entry drill if it continues heading higher. Yep, that's it. Okay, so I don't think shorts are going to be, I mean, it did take this liquidity out, but I don't think that shorts are going to be validated here. Look at that type of reaction from the low of that balanced price range, right? My guess is it continues higher, at least for a little bit. Maybe stays within this range for some time. But yeah, I don't think that, I mean, maybe it continues short there, but that'd be pretty dirty. Yeah. So again, like I don't know. We did not see displacement below here. We did see that these highs got taken out here, and it does kind of look like it's gonna attempt to. Oh, look at that level that it bounced at there. Perfect relative equal lows there. So I have a feeling these will get taken out. We took out buy side already, and we weren't able to make it up here. We made it to look at where we exactly made it. So maybe our short still is okay. So look at where price traded to. It traded to exactly the 50% mark of that wick here. See that? This wick, we did not trade to that high. So I think the short's still okay. And I think taking this down to new week opening gap is probably still on the plate here. Because we stopped right at the midpoint there. We stopped dead in its tracks. Like you can't get more perfect than that, right? It's wild. .50, 532.50 there. So I anticipate that, you know, we took that 50% mark out. It's likely gonna head lower from here. So I think the short's still good. I'm gonna expect the new week opening gap to be targeted next. We should see price start to aim for around this buy side imbalance, and then come back up, and then immediately reject off of that bearish breaker there. Unless it's super bullish on the 15-minute, that's another thing there, right? That's why we have a tough time trading Asia. But we like the fact that it took out this area of liquidity, 50% mark. It was good to go there. So traded outside of this pool liquidity here. So it might not get down to the new week opening gap, I guess, if this 15-minute holds quite well. That would be frustrating. Um, 15-minute has 4 minutes to go. So that's once, twice. If this goes a third time on the 15-minute chart and fails to close below this midpoint there, then likely it will now reach for these relative equal highs here. So it's formed liquidity up here. So shorts may not be plausible. I think maybe they've got one more push down into that 19,513 level. But again, like they don't have to come down to new week opening gap. I'm just thinking if it is very bullish, then it may just leave these completely open until, you know, Monday morning New York or Tuesday or something like that. But again, this is why, you know, we've reached a very key level here. We expect accumulation around this point in time. We don't know. We're hugging the low end of this balanced price range. We get one more run down to this area. Who knows what's going to happen here? Very tough to trade as we close in on the last bit of Asia's session. We started the week, traded lower, and now we're trading higher. So on the day, you have to keep in mind that that new week opening gap open. So this open here, new week opening gap low, is from a weekly perspective, this level, if we're bullish and we see price trade back down below these levels, we want to be buying at that time, right? Price can trade down to it, sure, but we want to make sure that we are buying at those, at that, those lows if we do end up trading down there. So if you are thinking that price will draw back and accumulate during Asia, as it oftentimes does, then you can think that, oh, we've taken some liquidity out here. We've created relative equal highs up here as well. Do we have enough juice to go all the way down here is the question. I mean, look at that. You'd have to go through one PD array, two PD arrays, and then get all the way down here. So it will be tough for it to do that, but not impossible. I'm going to remove that for a second there. I'm going to draw this one out a bit. Get that potential bearish breaker in. So we want to see big dark candles to just completely pile through all this movement from earlier. So I like this as a potential high, low, higher high. I just don't know how low it can go. If it keeps on getting bought up right around here, then that's that 15-minute buy-side imbalance. We closed above that buy-side imbalance, by the way, on the 15-minute chart. So if we are going to head higher, and this is extremely bullish, then we run the possibility of this failing as a bearish breaker because there's a 15-minute or higher area of liquidity there, kind of waiting, right? On the 4-hour chart, we came back down to a down close candle and started trading higher. We're kind of still consolidating higher. Yes, we do have liquidity beneath us, but is it going to go there? I don't know. We need to see how weak this is, right? Okay. Let's see, what else is there? Okay. What else is over here? So we're starting to get some sell-off there, so that's good. We like to see that. At this point, this can be treated as a lower time frame bearish breaker. Whether or not it holds is a different question. We need to watch. Does it hold above this midpoint and just completely blast through all this? Or does it drop through all of this, become a balanced price range here, and use that to jettison itself back up off of this new week opening gap high towards those relative equal lows? So that's what I'm kind of looking for. So right now it's holding, but we want to see if price can close below that midpoint there, 19,513. We want to see it just completely pile drive through there. And yep, we want to see it pile drive through that whole section there. We want to see the bearish breaker. So let's see, that high stop losses can be above that 19,528-ish level at this point in time. So far so good still. Note this volume imbalance that's here. Could trade up to that. And this bearish, this up close candle on the way down. I would like to see if it rejects off of this breaker here, or, I mean, the only problem is that the 15-minute time frame doesn't seem like it wants to, you know, take it lower yet. It stopped just before the midpoint of that buy side imbalance. So if it runs from here, which is very plausible, I would not be surprised. Would prefer it just, you know, drop all the way down to those relative equal lows, but maybe it's not but bearish enough. Okay, so we traded to the sell side imbalance here. We want to see it reject off of the breaker if it's bearish at all. But if it's not bearish, then this is the imbalance that it needed in order to take out these relative equal highs back long. Okay. So I'm noting that it traded to the midpoint of that down close candle before this impulse leg lower. And so far it is holding below the breaker. So I think you're probably still okay to travel down to the new week opening gap. I think it's still okay, but let's see. Let's break below the midpoint of this buy side imbalance first, and then we'll see. Because it could also, at 19,511, it could drop down to 511. Treat this as a bullish breaker, or sorry, a bullish order block as well. Especially after taking, would have been nicer if it took out this low ahead of time, like earlier. I would have trusted the bullish side a little bit more, but watch 19,511 here. So we want to see it drop down quickly and head towards the new week opening gap. That would complete a lower time frame market maker sell model, in my mind. But it's holding here quite well. So you can kind of see it's protecting that 15-minute buy side imbalance. About 7 minutes left on that 15-minute candle, so it can wick down below the midpoint, but if it closes above that midpoint, then there's a chance that it is not willing to, the algorithm is not willing to allow price to head much lower. It was just coming down to pick up some more orders. So that's why I want you to watch 19,511 really closely, as that is a bullish, a down close candle within that area. Oh boy. It doesn't look like this is gonna drop anytime soon, huh? I want to see some big candles if we can get some big candles down there. If this holds here, then we can clearly see on the 15-minute that it is failing to reach even halfway here. And then we can probably look for plays on the lower time frames to take this area back up to take out these relative equal lows up here, followed by these relative equal highs up here alongside this relative equal high. That would be the play. So any shorts, very suspect right now. Longs are looking nicer by the day. All right. So it's headed back up to that breaker. I feel like it's, yeah, I feel like it's kind of just squeezing again. So, I mean, targeting those relative equal highs feels reasonable. What are those relative equal highs here? So this one didn't get touched at 19,550. But I mean, it is rejecting here. So maybe it's just consolidating on its way down. And it's so tough to tell. It's 8:40 as well. Asia session's almost over. Maybe it was just picking up some more orders to head lower here today. Who knows? Well, let's see if it creates a lower low here. It definitely traded down to a 1 minute buy side imbalance, sell side inefficiency there. So we'll see if it holds here or not. Oops. I can draw this out for everyone. So far, that's holding. And that is a very interesting 15-minute candle. We traded to just above the midpoint of that 15-minute. So if we start to get displacement above here, then we can probably go down to a lower time frame, look for a imbalance, because this traded back down to, let's take a look at this swing move from swing low to swing high. So we traded to almost equilibrium of that swing. If we take the candles, let's see what the candles say too. From a candle perspective, we did trade to the equilibrium point. You gotta see that here, right? So, and we didn't make a lower low here. So I'm wondering, does our 15-minute candle end up pushing up higher here, aiming for this volume imbalance? Let's see. I think we're going to get a push up to 550, maybe up into this like 550 area, I imagine. Because now they're going to squeeze all of these folks here, right? So everybody here, they should see that squeeze. All right, so your first profit target should be at 19,546. It's looking like it's probably going to shoot up to 549 as well. So let me see. So if it shoots up to 549, chances are it's going to, continue higher here. This was a pretty nice displacement. Bearish order block, it just traded to 1 minute. So 1 minute fair value gap up here. 15-minute buy side imbalance held. So on the 1 minute, you could probably pyramid here if you think that it's going to head higher. And you don't want to see it close too much below this here. But as you can kind of see, there's liquidity above here. There's liquidity below here. You kind of just have to be careful here. We could be retracing down to this volume imbalance here alongside this candle. But that was almost an immediate, you can kind of see almost an immediate sell-off from there. That was a really interesting juice. So it could drop down. Maybe it took out like a small bit of liquidity there. It could drop down now and take out those relative equal lows, I guess. I mean, that's quite a reversal there. So, I mean, that kind of a candle is like pretty much engulfing there. So if it doesn't go below 513, that 25, and it just continues higher. I mean, that basically got everyone who sold or tried to come in late, they got stopped out there. So we need to see, does this accumulation range and this higher high, does this 15-minute candle hold here? So far, it's been bought back up, but that's no guarantee that it won't continue going lower to tackle more liquidity down here. But, I mean, that's Asia sometimes, you know, when you try and trade too close to the end of the day, end of the session, you know, you're going to get some of these peaks here that go take out liquidity, aim for internal range liquidity, and then just completely V-shape you. So, yeah. But look at all these relative equal highs that are forming here now. So you've got this high and this high on the 15-minute chart. On the 5-minute chart, you have this high, this high, this high, this high, this high as well. You have this high and this high potentially. But you also have these down here too. So, I mean, both can be targeted at this point in time. We like seeing that no lower low got formed, but again, this is one of those ranges that it could stay within this range and drop down much further. But it does look like we've, at least the bulls or the algos, kept this intact for now. So we'll see if it continues higher. Or if it drops well down towards this sell side liquidity. So you can kind of see how you want to, like, if you're going to trade Asia, you need to trade within the first like couple of hours, because after you get past like 9 p.m., things will slow down a bit until maybe like 11 or 12. So even for me, I'm going to close things up at 9 o'clock. That's going to be it. This could drop right now. I could see the case for any of these, anything to happen here. But since the draw is higher on the higher time frame, remember, we're looking at those previous new week opening gaps that are clustered above us. Since that happens to be my bias, my draw, I'm more inclined to see price continue higher, or, you know, have a tendency to continue higher instead. So if you're shorts, look for quick liquidity sweeps and, you know, 10 handles at a time. But longs, I think, will have the upper hand this week, at least until those liquidity pools are taken. So let's see. Maybe, I mean, I could be proven wrong. It could just drop like crazy and go for new week opening gap and the relative equal lows down there. It's not screaming, you know, buy, buy, buy. But yeah. We shall see. All right. So before we go, I'm not going to sit here and wait for all this, but before we go, any questions from people? Oh, nice big black candle there. Anything on your mind? Hopefully everyone's trading. Hopefully everyone's able to trade, your session. I wouldn't recommend trading Asia. It's not fantastic. Yes, there are plays, but you have to be like on, because sometimes they'll leave without you, and nothing will happen, right? Like, or you'll get price action kind of like this, where after 7 o'clock and 7:30 hits, liquidity got taken, so now it's kind of just trying to figure itself out now, right? And looks like the shorts might be winning. Any plans for trading again this week? It's tough because I have to go into work 3 days. Oh, maybe it's going. So I have to go into work 3 days a week, so it's really tough for me to find the right times to trade. I don't know if I'm going to be able to trade again this week, honestly. I'll try to find something maybe in the morning. I don't know. It's going to be pretty tough. Still haven't found a way around that yet, though. I mean, unless I leave a trade like for the whole day and just, hope that stop losses catch appropriately. It's really hard for me to find times to trade because when I have to go into work, you have to make breakfast, you have to get enough sleep, and FOMC's Wednesday. I've got demos on that day too, so yeah, really, really tough stuff. So yeah, I don't know. It's gonna be really tough. Yeah, Lionsfit, thank you, Johnny. Have a nice dinner with the wifey. Thank you. Yeah, we'll see what happens. I mean, this is, it's towards the end of 9 o'clock, so I don't know. If you have any trades, like you can try to read this, but it goes so slow that, I mean, there's too much liquidity on both sides to be taken, so you'd be better served setting an alert to see if these relative equal lows get taken, then you can look for a long, or if these relative equal highs get taken, you can maybe see if it heads short to take out some more liquidity there. Yeah. Yeah. I mean, I'm guessing they take out, like, they go short-term liquidity to liquidity. So good luck tonight if you are trading, but we were fortunate to get that trade done in the first hour of trading. So we'll see if we hit our relative equal highs and take those out. But until then, stay safe trading. I'll let you know if I am able to come on one of these evenings. And yeah, I don't know yet, but yeah, we'll try to find some time if we can, but if not, I'll try to find a trade here and there. I'm only going for like, 10, 20, 30 points anyways, so hopefully you can capture some more if you're able to trade during the day. Hopefully you're able to capture some more than me and parlay your accounts up much faster than me. I've just kind of accepted that this is the 9 to 5 grind, this is what I have to do. So yeah, with that, I think I'm going to close down. So I'll, let some sim longs go. I want to see if it trades up to this area, 550, maybe up to the 580 level, and see if we get a daily range expansion up to that volume imbalance at 594. Cool. All right, folks. Well, appreciate you being here. For those that are still here, thank you very much. I hope this has been fun to watch and insightful. I know Asia's session's a little slower, but for those that have like 9 to 5s, it's like something that you're gonna have to learn, and it's not great, right? So, yeah, take care, everybody. Trade safe, and thank you very much for joining. Appreciate your likes, and we'll catch up soon. Okay, have a good evening. See ya.